Welcome to this tutorial on accounting basics. Today, we'll explore debits and credits. Understanding these will help you keep accurate financial records for your business, studies, or personal finances. In accounting, every transaction affects accounts. Accounts are categories used to record and track financial activity. The five main types of accounts are assets, liabilities, equity, revenue, and expenses. Assets are resources you own that have value, like cash, inventory, or equipment. Liabilities are obligations you owe to others, such as loans or bills. Equity represents the owner's share of the business, also called capital. Expenses are the costs your business pays to operate, like rent, salaries, and utilities. Revenue is the money your business earns from selling goods or services. Every transaction affects at least two accounts. This is called double entry accounting. Debits are recorded on the left, credits on the right. Debits increase assets and expenses, and decrease liabilities, equity, and revenue. Credits increase liabilities, equity, and revenue, and decrease assets and expenses. Example 1. You purchase office supplies for $500 in cash. Debit office supplies $500. Credit cash $500. Example 2. You receive $1,000 payment from a client. Debit cash $1,000. Credit revenue $1,000. Example 3. You pay $800 rent. Debit rent expense $800. Credit cash $800. Example 4. You take a $5,000 loan. Debit cash $5,000. Credit loan payable $5,000. Debits and credits must always balance. Total debits should equal total credits for each transaction. Recording an asset increase as a credit instead of a debit is a common error. Always follow the debit and credit rules. Forgetting to credit the corresponding account causes imbalance in your books. Always record both sides. Beginners often record the wrong account type, or forget to balance debits and credits. Double-check your entries. Use T accounts for practice, write clear descriptions, and always check that debits equal credits. The more you practice journal entries, the easier it becomes to remember debit and credit rules. Debits increase assets and expenses, decrease liabilities, equity, revenue. Credits do the opposite. Always record transactions in at least two accounts, follow debit and credit rules, and balance your books. Practice real-life transactions. Use this knowledge to prepare accurate financial statements. Thanks for watching. Keep practicing, and debits and credits will soon feel easy. Subscribe to Endalk Semagn for more accounting tutorials. See you next time.